Thank you for listening to the Political Risk Podcast, where geopolitics and insurance meet. Welcome to the latest episode. I'm David Benyon, and I'm joined by Jamie Cleary, MS Amlin's Head of Crisis Management. We'll discuss how MS Amlin's crisis management business has developed, Jamie's own career path, and we'll take a close look at a landmark development for the war risk insurance market that Jamie has helped bring about. That is the Ukraine Reinsurance Guarantee Facility, URGF. The facility provides reinsurers with a government-backed guarantee covering losses on certain war-related risks underwritten by local Ukrainian insurers, providing sorely needed protection for private sector investors and contributing to a better functioning war risk insurance market. We'll explore how the model behind the URGF might be applied elsewhere and what it could mean for future public-private insurance collaboration. Before we get stuck in, I'll provide a few more details about the URGF. It's a first-of-its-kind war risk reinsurance facility that brings together government and private entities in support of Ukrainian economic resilience and recovery. It was announced at the end of last year with a starting figure of €110 million of financial backing. In March, the URGF became operational, providing more than €5 million of reinsurance coverage in just the first few weeks. Here are some of the stakeholders. So the fund is part of the European Bank for Reconstruction and Development, that's the EBRD. It's financed by donor capacity from a panel of supporting governments, and I'll list those donor governments during our conversation. Aon is the broker managing the facility, and international reinsurer MS Amlin provides underwriting expertise. MS Amlin has committed €80 million in reinsurance capacity, rising to €110 million over 5 years to support war risk policies underwritten by 3 Ukrainian insurance companies. The 3 Ukrainian insurers that are signed up from the outset are Ingo, Colonnade and Uniqua. Apologies if I butchered the pronunciation of any of those companies. At launch, the facility covers inland cargo, railway rolling stock and motor vehicle damage, with the flexibility to expand to a broader range of assets as demand evolves. Thanks to the local Ukrainian insurers' distribution networks, the facility is expected to foster the provision of war risk coverage to local businesses at scale. And the EBRD has estimated that by recycling capital for short-term policies, it can facilitate insurance cover for up to €1 billion worth of goods and vehicles in transit per year. Okay, that's plenty enough from me. Let's get into it with Jamie. So Jamie, before we get into the facility itself, welcome to the podcast.
Thanks, David. Thank you very much.
And I'd like to start with your own journey and how MS Amlin's crisis management business has evolved under your leadership. So you've been with the company for quite some time now. Could you start by just telling us a little bit about your journey and how crisis management business has grown up over the years?
I started in insurance in 1998 and almost kind of fell into insurance like many other people. Applied for an internship at a broking company, realised that I wanted to kind of apply for an underwriting role in the future and was lucky to be invited back. Eventually, I started as an underwriting assistant for a Lloyd's syndicate, worked my way up, learning about credit insurance, war policies from aviation to marine, kidnap and ransom, and also terrorism and political violence. Defining moment in my career, but also generally in insurance, was 9/11, where the terrorism and political risk product became more relevant. And you had a number of other losses up to 2003, which included Katrina, which was a major hurricane, and Aer Lingus, which was a very large aviation war type loss. And the market saw a lot of growth through that period of time. 10 years later, I found myself joining MS Amlin in 2010, where there was an opportunity to start a credit political risk portfolio, pretty much from scratch. Crisis management didn't really exist then at MS Amlin. We were very much kind of an offshoot of the marine account. So we were very much kind of the war department within a marine division, MS Amlin, and that quickly expanded into crisis management once credit and political risks started to develop, and so did the war and terrorism account, including product recall.
It's always interesting to talk to somebody in the business whose role spans credit and political risk as well as political violence and war risk stuff. Everyone's business is organised slightly differently, and you're never going to get the same answer depending on who you ask about how that kind of evolution has gone. So your portfolio that you oversee, as you say, you've got political violence, you've got product recall as well, and credit and political risk. So does crisis management span all of that. That's how you define it.
Yes, those are the main product lines within crisis management. Credit and political risks makes up roughly 60% of crisis management, and political violence 35%, and then the balance being product recall.
And what's that meant in terms of the growth of the headcount of the team over time?
When I joined in 2010, we were a team of 4 people, and that was very much London-centric. Now we're a team of 30 plus people, expanding into Dubai and Singapore. So it's quite a lot of growth over the last 15 years. But the majority and the driver behind that was credit political risks and very steady growth within political violence.
What do those hires and the locations expansions say about where you see demand coming from in the market?
There's been very much a natural increase in demand as the market's grown organically over time within London. But we're now seeing further expansion in the Middle East with a current hire that we hired, Osama, who joined us earlier this year to expand our credit and political risk offering.
Yeah, I was going to say, so that's that part of the pie chart. You said that 60% is credit and political risk.
Correct.
So do you try and keep those proportions roughly?
We're flexible. It depends where the business drives itself. We tend to target, obviously, the profitable end of what we do. So there's no real kind of business mix between the 3 lines of business. And I think that's kind of a key to success of the portfolio. I would say credit political risk is the major growth line, where political violence tends to fluctuate depending on the market conditions.
So you've already mentioned different lines of business and different hubs and offices. So what does the team structure look like?
We have 3 heads of class within crisis management. In product recall, that's Julie Ross. She joined us a couple of years ago. We have Guillaume Watkins. He heads up political violence. He's been here for 17 plus years, has an excellent reputation in the market, very well known. And we've got Nick Oxley, who was appointed recently as head of credit and political risks, which was the class I was running for him. And the team is continuing to grow. We've recently hired a new senior underwriter within the political violence team. That's Gisela Nelson, who joins us with a wealth of experience, focusing on political violence and terrorism. And also Osama, who has joined us within our Dubai team. He comes with, again, wealth of experience in credit and political risks, where we see a lot of opportunity in that market. Our Middle East office is run by Vipul Gupta. He's a senior executive officer out there running the office, and Osama El Sheikh reports into Vipul, and he's responsible for developing business within that region. The reason being is that we've always felt that whilst it's had a relatively good service from brokers out in the region, we feel generally it's underserviced. The money now moving out of the Middle East, like Dubai and Saudi Arabia, is moving to North Sea, ex-CIS states, and Africa, and less internalized, so there's more demand for credit and political risk business. So we're really kind of placing talent out there strategically to service our clients. So
one of the initiatives you've led, which I think is really quite an exciting development, is the Ukraine Reinsurance Guarantee Facility with the EBRD. So for listeners who may not be familiar with it, could you explain in your own words how it works, why it's unusual, why it matters?
How the facility works is that it allows local insurance companies in Ukraine to provide much needed war risks insurance to the domestic market out there who need the cover to operate on a day-to-day basis, whether it's goods in transit, stocks, and key services that keeps the country running through a moment of crisis. This is already live, and this cover was withdrawn by the market, understandably, once the war started. And it's taken some time to gather pace and put the facility in place, but we feel that this is a good starting point to give the cover that was once excluded to clients that actually would benefit from this much needed insurance. Now, we were unable to give this cover without support of the government, so we were able to use donations.
So just to recap on what's been said in previous press releases about the donor countries, the URGF has been initially backed by the governments of France, the UK, Norway, and the Taiwan Business EBRD Technical Cooperation Fund. Additional donor support was pledged by the EU and by Switzerland, with a list of donors expected to grow over time.
So it's a kind of consortium of donations from those, and we wrapped those donations up into a financial guarantee, which we used as a reinsurance vehicle to allow us to provide that insurance coverage where they did not have that expertise to do so in the first place. It's vital because a lot of the companies and large commodity traders, certainly the ones that provide food and move key goods and services, can't operate without insurance. And this cover was effectively prohibiting them from doing business in the region. And it was imperative that they were able to move those key goods and services around, not only for the benefit of Ukraine domestically, but also to help with food prices globally, given that Ukraine is a very key strategic country for grain and food prices. So it has a global impact as well.
Yes, so a lot of this is is it rail, riverine trade, stuff on the Danube?
Yeah, it would be trucks, motors, motor insurance, soft commodities, storage.
So what makes it so unusual?
I guess what makes it so unusual is that no one else in the market was able to provide war and land coverage, where we have had in the past attempts to make marine war coverage, but this was the first groundbreaking war on land coverage that the market was able to provide, which was, again, excluded not only by reinsurers, but also insurers. And what's, I guess, unique about this is that we are able to assist governments with money to donate towards a profitable outcome with providing insurance. The key involvement for MS Amlin within the facility is to provide underwriting expertise, given that we are able to look at the wordings, manage claims, and provide due diligence on the underwriting locally to ensure that the capacity that's donated is treated fairly.
So the capacity comes from the EBRD?
The capacity comes from the EBRD in form of a guarantee, but that's backed up by the government donations.
So to give local Ukrainian insurers the ability to write war risks, the cargo and goods in transit, can you break that down with a few examples about how that would work in practice? The kinds of businesses that you think are now able to operate again that maybe couldn't before?
That's a good question. Having seen some of the risks that have come through on the bordereaux, given this has been running now for a few months, we were delighted to see that commodity traders are entering the Ukrainian market again. Previous to this insurance not being available to them, they were unable to operate within Ukraine to source grain. And we're seeing traders and commodity companies sourcing, farming, and helping with those exports, but also not only exporting, but helping with goods and services internally as well in terms of logistics. So logistical companies entering the market, allowing goods and services to move around, providing great social and economic benefits, but also multilateral companies entering Ukraine as well, allowing more global trade to flow.
So from your perspective as an underwriter, what are some of the insights that the facility gives you about the risks that we're actually seeing at the sharp end of things about modern warfare in Ukraine, especially development like use of drones or AI?
It's been insightful, but actually, scary at the same time. The way modern warfare has developed, it's certainly focusing the minds of underwriters on how we perceive risk in a war-like environment, but also the scary reality of how warfare has changed.
The stuff we've seen in recent days, just on drones hovering over airports in Scandinavia, doesn't matter whether in fact that's a disgruntled teenager or it's Russian-backed organised crime. Drones are being used in all sorts of ways. Ukraine isn't just a sort of a bubble where you can see these things being pioneered, but they are going to affect the world outside Ukraine.
It definitely has been a marker for warfare, and again we can see other conflicts that have happened over the last few years, and more recently where drones have been used. But the insights and information that we're receiving on how these drones are being used and whether AI is incorporated within the technology as well, and different strategies in terms of how drones are used, is very eye-opening, and it keeps us very much on the kind of front foot for how to perceive that risk.
We've talked about how warfare is changing and use of drones, things like that. But I mean, this is all very raw, and this is involving people that you're working with in Ukraine as well. I assume there's a lot of emotion involved in this.
You're absolutely right. It is incredibly sensitive, and having spoken to the insurers out there when they've taken a very long trip to London, mostly by train, we hear not only how drone technology is changing and the strategies that people use to find targets, but also, what was quite harrowing was the description of how they sound. But these people are hiding in their houses. They're having regular air raids, alarms going off in the evening, waking up 3 a.m, 2 a.m, small children. And I think the thing that struck with me was the human side of this, that it's not just necessarily how we navigate around as insurers, but actually this is a very scary event for many people in Ukraine. So I think that's something that's definitely worth taking away when we're looking at these risks.
In our market, we do talk a lot about risks and we talk a lot about emerging technologies, and it can sound awfully sanitized sometimes.
There's a human side to every risk we write.
The facility brings together collaboration between insurers, governments and structures like the EBRD. So thinking of that as a type of innovation, what do you see as key lessons in terms of public-private partnerships?
I guess the key lessons that we've learned is that it's possible. Before, it was a bit clunky, and I was very impressed with how we were able to, with the help of the EBRD, liaise with the government agencies to provide a solution that works for people in need, to provide continuity of coverage. I think that's really the key takeaway from this facility. And what impressed me most about it, in some ways, when we're underwriting these transactions, this one took 2 years to put together, you don't really realise the impact of what you're doing until the final product's delivered. And that was quite groundbreaking, not only for the market, but also for myself as well, in terms of how important that collaboration is. And I'd like to see more of that going forward. It's generated a lot of interest with the UK government, with other projects that we're working on, and more forums of collaboration, more round tables where MS Amlin have a seat with other insurers and other brokers to share ideas and brainstorm on how we can provide further solutions, not only in Ukraine, but on other lines of business, but also geographically.
Well, you described as a blueprint, this facility. So where else in the world, or what other kind of lines of business do you think a similar model could be applied?
It's a good question, and this is something that we are investigating internally as well and doing quite a lot of research on, using this model as a blueprint, as you said. And I'll just pluck a few examples of what could be possible. So we often hear in the news a lack of insurance in areas where there are fires, wildfires. It's too expensive or uninsurable, or certain flood zones which are either uninsurable or too expensive. Now, local governments could look to the private market to provide a solution, or change laws around that if they wanted to, or they could front donations and money and work with insurance companies in the private market to design products like we have done with the EBRD to give their money a fighting chance that actually it creates a reasonable product for the end client, but also supports the country and the problems that they face.
It does feel like, because PPPs in their various forms, that abbreviation is becoming a lot more frequently seen, and they do vary the context, the risk, whatever it might be. But they're not new, obviously. You can look at something like Pool Re for terrorism, for example, something that you would know very well. It's been around for decades. It ain't new, but something like that, it didn't happen overnight either. It seems to me like what might be happening is that there's a more awareness and maybe a bit more flexibility that might lead to things happening faster, more flexibly. So as things emerge, everything's a bit more dynamic now in terms of the risk environment. You've got that a little bit of muscle memory between government, between industry, that you can create new structures so that where a protection gap forms and the industry doesn't feel it can fill it, there's less of a shock, therefore, things falling into a protection gap. And governments can kind of continue on protection and the industry can do its part too.
You're absolutely right about the pools. They've been around for a while. It's not a new concept. These things exist. The UK, India, and various other sophisticated jurisdictions, have pools where there's expertise. But I guess where there isn't the expertise on the ground for certain types of coverage, that's where a similar structure that we created comes into place. So I wouldn't advise for a government just to set up a pool without having the right consultation, the right level of expertise. And that's really where the insurance companies like MS Amlin and others can step in and provide that guidance, consultancy and protection, where if you were to go alone, it might not be as successful. And ultimately, if it's not successful, that impacts the clients. So I believe there's a bridge between a pool forming in areas of the world And prior to that, I think these sort of structures should exist.
So finally, looking ahead, what role do you hope that insurers like MS Amlin can play in bridging the gap where traditional markets won't take the risk? And what do you want policymakers and donors to take away from the Ukrainian example?
I feel that MS Amlin obviously have a very experienced team of underwriters and been offering a product over many years that's been tried and tested through various cycles. And I think the rest of the market and other insurers are on the same page. So there is the ability there to innovate and to look beyond what the first perception of the risk is. For example, when I first was given the opportunity to look at this war facility in Ukraine, it wasn't the best opportunity in the world given the war had just started. But keeping an open mind and working closely with professionals is really the crux of the message behind the success of this facility. You can't necessarily dismiss an idea at the start, give it some time and draw on expertise within the company. It wasn't just necessarily the underwriting side here at MS Amlin, it was our legal and compliance side. We have a first-class team within war and terrorism with a lot of bench strength, a lot of depth, and we have a great claims team with award-winning service. So when you have that experience behind you, and a lot of other markets do alongside MS Amlin, I think the lesson that we can learn here is that actually we should use that more and be a little bit more open to new ideas.
Okay, that's all for now. Please tune in next time. More episodes and top guests from the overlapping worlds of specialty insurance and geopolitics in the pipeline. I've been your host, David Benyon, and I'd like to thank my wonderful guest, Jamie Cleary from MS Amlin. Production was by Peter McGill, and Lawrence Durkin made the music.